Once we've confirmed all the details inputted in the email mode or live call mode and selected the appropriate toggles, we can click Generate Term Sheet and see the output on the right side of the screen. This term sheet is a preliminary, non-binding summary of the proposed loan terms and is intended for discussion purposes only. It reflects the information entered into the tool at the time it was generated. At the top, you'll see the borrower and deal information. This includes the applicant name, the borrowing entity, the loan type, and the broker associated with the transaction. This section is important for confirming that the loan is being structured under the correct borrower and entity before moving forward. Next is the subject property section. Here you'll see the property address, property type, number of units, and the requested closing date. This confirms that the loan is being sized for a 1 to 4 unit residential property and that the timing aligns with the borrower's expectations. Moving into the proposed loan summary, you'll see both the requested loan amount and the proposed loan amount. The proposed loan amount reflects the maximum loan supported by leverage limits, pricing, and program rules, which may be lower than what was initially requested. You'll also see the interest rate listed as a simple interest rate, along with the origination points charged on the loan. These two items together determine the overall cost of capital for the borrower. Below that are the core valuation inputs, including the as-is value, after-repair value, and estimated rehab budget. These numbers drive all leverage calculations in the sizer. The estimated monthly interest-only payment shows what the borrower can expect to pay each month. The estimated total interest reflects projected interest over a 12-month term using a Dutch interest structure. The leverage metrics section shows loan-to-value based on the as-is value, loan-to-value based on ARV, and loan-to-cost based on total project cost. These percentages confirm whether the loan fits within allowable leverage limits. Next is the borrower profile. This summarizes the estimated credit score, the number of verified projects completed in the last 24 months, and whether any program-specific toggles such as Premium Student or Exception County were applied. This section is critical because borrower profile directly impacts leverage and pricing. The pricing and credits section shows whether there are any earnest money deposits, seller or broker credits, or assignment fees being applied to the transaction. If these fields show NA, it simply means they were not included in the sizing. The pricing breakdown provides a view into the factors behind the pricing derived from the credit score and experience of the borrower, and the fees section provides a detailed view of the transaction economics. This includes the purchase price, rehab budget, contingency reserve, broker fee, origination fee, and all estimated COGO closing costs, such as consulting, underwriting, credit checks, and prepaid interest. You'll then see the total estimated closing costs, total project cost, and final loan amount. These figures roll up everything needed to complete the transaction. The estimated cash to close shows how much capital the borrower is expected to bring to closing after accounting for the loan proceeds. Payment reserves required reflects the amount of interest reserves that must be held at closing based on the loan structure. Finally, the term sheet concludes with standard disclosures, noting that all terms are subject to final underwriting, collateral review, and credit approval, and that terms may change prior to closing. One final feature of the Sizer and Term Sheet tool is the ability to quickly save it as a PDF to send to the client by clicking this button. That's a complete overview of the term sheet output and how each section should be read and understood.